I think that the number one priority for people should be to hold as much Bitcoin as they can and to hold that sovereignly in self-custody. That should be the modus operandi for businesses as well. I wrote a piece last year right at the tip top of the craziness that was going on in the Bitcoin Treasury market called mNAV madness. And if you remember back to that time, the treasury companies could do no wrong. They were going to the moon. Like there was nothing that could stop it. Ultimately, this is like a basis trade, right? You need that premium to hold or expand in order to take the extra risk beyond just buying and holding Bitcoin. Money is a tool, right? Like I am not one of those people who says absolutely under no circumstances should you never ever sell your Bitcoin. There are other ways to fund your lifestyle without selling Bitcoin. You can borrow against it. You can move that into, something like an STRC. Generating income from selling down your stack is the FIRE way. That's what the FIRE people do, right? They build a stock portfolio and then they sell it down.
Hey everybody, Tyler Rowe here, and today on the Bitcoin Treasuries podcast, I'm talking with Trey Sellers. Trey has 15 plus years of experience across finance, banking, and capital markets at world-class financial institutions. As VP of Sales at Unchained, Trey helps individuals and businesses secure their Bitcoin. He publishes a newsletter and has a website that helps people understand Bitcoin's role in achieving true financial independence. Trey, welcome to the show.
Yes, sir. Thanks for having me, Tyler. I'm really excited to be here.
Absolutely, man. I want to dig into this. I'm so interested, and I'd like to start off reading a part of a tweet thread that you had a while back. You said, in Bitcoin, we say, stay humble, stack sats. And that's, of course, a hat tip to Odell. The FIRE community promotes something slightly different. Stay humble, stacks stocks. A lot of FIRE proponents have a distaste for Bitcoin, even though they treat stocks the exact same way as savings. No FIRE practitioner looks at PE ratios, ROE on the balance sheets of thousands of companies in the broad stock market indexes they buy. They're not investing. They save stock shares to outpace the ever-decreasing purchasing power of their political currency units. That's exactly what Bitcoiners do when they stack sats instead of stocks. Sure, the stock market has a longer track record than Bitcoin, and it's less volatile right now, but anyone who's done a little honest digging comes away with a reason to allocate something to Bitcoin. So, Trey,
man, that's a pretty good thread.
Unpack it for us. Tell us about the FIRE movement, how you were drawn to that, and how it can kind of be interfaced and expanded upon with Bitcoin.
Yeah. Well, I found Bitcoin fairly early on in terms of like just having some little interest in it. And I started buying a little bit back in 2014. But fast forward a few more years, at that early time, like a lot of people, I didn't really understand what I was buying. And fast forward a couple of years, and I had really found the FIRE movement as something that could help me put a framework around my personal finances and, in all honesty, find like an escape valve out of corporate America. I was working in banking. I had good days and bad days, but I didn't want to be stuck in that cubicle, so to speak. It wasn't actually a cubicle. I was sitting on a trading floor. It was very high pressure, tough job. And, like I said, I enjoyed it a lot of days, but there were a lot of days where I was just like, man, I wish I could just play golf every day and be done with all of this. And so I kind of made this decision like, hey, this FIRE approach, which I'll get into in a little bit, it really makes a lot of sense. I'm basically just going to save as much as I possibly can, and I'm going to plow it into the index funds. And I'm not trying to beat the market. I'm just stacking stocks, right? And I'm not stacking specific stocks. I'm stacking the index so that I don't have to worry about like what kind of earnings any particular company is doing. I'm just using the stock market, generally speaking, as a savings vehicle so that I can build enough wealth, build a portfolio that's large enough to cover my expenses. And the way that the FIRE movement approaches this is typically using what's called the 4% rule. And what that means is that you are building a savings portfolio, an investment portfolio that you can start to draw down on the order of 4% per year. And if you build it up large enough, that 4% per year will cover your your annual expenses. And so the way that we typically calculate this is we start with that annual expenses number, and the inverse of that 4% rule is 25. So 25 times your annual expenses is what you need to build a portfolio of investment assets uh, to, and typically liquid investment assets, so that you can actually access that capital in order to cover your annual expenses. What does that mean in like raw number terms? Well, if you've got $100,000 of of annual expenses, that means you need a portfolio that is $2.5 million or more in order to be able to draw down 4% to cover that $100,000 of expenses every year. So it's a very simple formula. It's a very simple framework. That doesn't mean that it's necessarily easy to implement, right? There's a lot of ups and downs in the markets, and life can throw a lot of different things at you, of course. But I was really drawn to this framework for personal finance, and I adopted it kind of full throated. And it was not too far after that, and call it the 2018 timeframe, that I really started to understand Bitcoin. And I basically just decided, okay, well, I get Bitcoin. I started allocating a lot more of my savings to it, and then just decided, well, why am I stacking stocks anymore at all? I'm just going to shift everything to Bitcoin and use that as my primary savings vehicle. And so thus started my FIRE BTC journey, so to speak, in that I have used Bitcoin as my primary savings vehicle for a very long time, but using a FIRE framework where I am very intentional about my spending. I'm maximizing my savings rate. I'm stacking as many sats as I can, as quickly as I can, to get to this number of financial independence that is about 25 times what my annual expenses are, or what I expect them to be in the future when I would get to this like retirement number. And then the last thing I'll say, and I'll turn it back over to you, is retirement is a loaded term. This financial independence, retire early movement, that retire early piece gets a lot of criticism, and I think rightly so. If you are a 40-year-old, person who has saved a bunch and you're in a position of financial independence, that doesn't mean that you have to like stop working, go play golf, go sit on the beach, and just do nothing for the rest of your life for the next 30 years, right? Like that gets pretty boring. I think people get wrapped around the axle a little bit when they're thinking about this. Really, what it means is get to a place of financial independence and give yourself the optionality to pursue whatever it is that you want to do. If you want to work on passion projects, build a business, volunteer in the community, travel, play golf, go on vacations, have more time with your kids, all of that opens up from this journey of reaching financial independence. And you can take advantage of that in whatever way floats your boat, right? So that's been my journey thus far. And in the last year and a half or so, I decided to kind of lean into that niche of understanding around personal finance and financial independence and Bitcoin, and create something that I think a lot of Bitcoiners really actually need, which is an actual framework beyond just the general notion of stacking sats as much as possible, and actually putting some structure around how they think about their personal finances. So this approach is really practical and beneficial to a lot of people. I think Bitcoiners can really learn a lot from the FIRE community, who are essentially doing the same things, kind of bringing it back to your initial question, which is that you're just using the stock market as a savings portfolio, as a savings vehicle. You're not actually investing, you're just saving. And Bitcoin is the ultimate savings vehicle. It is the ultimate savings tool. So why not use that as your primary vehicle, and leave the stock stacking to the traditional FIRE movement?
I want to talk about something that comes up in almost every conversation I have with Treasury executives. They get the Bitcoin thesis, they see the macro case, but then they walk into a board meeting and the first question is, who's holding it? Are they regulated? Are they insured? Can we audit this? That's where BitGo comes in. BitGo is an OCC regulated national trust bank. That means they operate under the same federal oversight as the institutions your board already trusts. Your assets are held in segregated trust accounts, never commingled. They're secured in 100% cold storage with multi-signature architecture. If you're building a case for Bitcoin on your balance sheet, BitGo is the custody partner that turns a board conversation from why into when. Visit bitgo.com/Bitcoin-Treasury to connect with their team.
It's the best kept secret known by every true Bitcoin OG. CoinKite has been building the gold standard in private key security for years, and they just raised the bar again. The Cold Card Q is an absolute powerhouse for serious Bitcoin treasuries. We're talking a full QWERTY keyboard, air gap protections, and it's built for maximum security. The brand new Cold Card MK5, it has a massive Gorilla Glass screen and new NFC functionality for an even more seamless experience. So if your business is large or small, there's a cold card for you. Head to store.coinkite.com and use the code 6BT at checkout for 6% off. Stop cutting corners on your Bitcoin treasury. You wished for it. Bitcoin is finally on sale. And if you're sitting on BTC and want liquidity without dumping your stack, Arch Lending can make it easy. You can get USD or USDC in minutes, and your collateral stays in qualified custody. They never rehypothecate your assets. As your assets move up and down in value, you can scale your credit line instantly or pull collateral back when the market runs. If you need help, you get real humans 24/7, not bots. This is Arch Lending. Simple tiers, public pricing. You can check them out at archlending.com.
That makes me think about, we all, the longer you're in Bitcoin, you learn from Bitcoin, right? You learn, maybe some of the reason you're drawn to Bitcoin is because you do have a lower time preference, but Bitcoin also teaches you to have that long-term outlook because it is a volatile asset. But as your conviction in Bitcoin, in holding Bitcoin grows, you can't help but lower your time preference. Some of that I think is fueled by some of the political implications behind that. Some of it's built by the scarcity of Bitcoin. Why do you think a lot of Americans classically today are living paycheck to paycheck, sometimes for reasons beyond their control, but oftentimes, it's because of high time preference behavior, and maybe a little bit of cynicism I've seen crop up kind of in the younger age cohorts. How you know movements like Bitcoin, like FIRE, certainly have a way to kind of unlock that lower time preference behavior. But what are the underlying causes behind that, Trey? And why is it so hard for a lot of Americans to find a way to have a lower time preference?
Um, there's no simple, straightforward answer there. And of course, it depends on the people that we're, talking about, the individuals who are, working in the economy and making day-to-day decisions. I think the broad strokes are, from the political and the monetary side, it's kind of like walking backwards or walking on a treadmill, right? It's like if you want to move forward, you have to move faster in the direction that you want to go, then the fiat currency is taking you backwards when it comes to like the debasement of your savings. I think there's a lot of like high time preference implications that come out of the fabric of the fact that the monetary system is broken and that the money that we use is built on credit and debt, which incentivizes more borrowing, more debt, and more debasement. And so over time, that compounding of the treadmill, rolling in reverse that you've got to try to outpace, it really starts to wear on people and they just can't really get ahead. So there is that structural aspect of it. That doesn't mean that you can't get out of that funk, right? Like plenty of people do. I think I advocate quite a bit in my newsletter for using the tools that the fiat financial system gives you in order to kind of accelerate your growth toward financial independence. You can complain about the system as it is, or you can use it to your advantage. Part of the way that a lot of people do this very successfully is just, the simple concept of like a 30-year mortgage. They're borrowing against the value of their home. If you're smart with that, you don't go and just blow it and spend it on consumer items. You invest that extra money that would otherwise be tied up in your illiquid home, and you're investing that in the stock market or Bitcoin, right? Something that is liquid, that is growing much faster than the inflation rate, than the rise of the cost of living that you've got. And you can take advantage of the system as it exists in order to like put yourself ahead of the game. Some of this has to do with just financial education. We don't really teach this in schools. it's really reliant on the parents, and the parents are often stressed and not able to deal with money either because they've never received good financial education. So I think there's a mix of different, reasons for why so many people are living paycheck to paycheck and can't, save, two nickels to rub together. But that doesn't mean that it has to be that way for any individual person. I truly believe that anybody who just opens their mind up to the possibility that this is even something they could do can set forth a path in front of them to actually make that a reality. A lot of what we do on a day-to-day basis and the experiences that we have, it really comes down to just kind of opening the aperture for what you think is possible, right? We say in joking manner, like, you can just do things. This is absolutely one of those things that you can just do. It may be tougher for some people in certain circumstances, in certain parts of the world, in certain parts of the country, but that doesn't mean that from a relative standpoint, you can't make progress toward this goal. And what's really fascinating about this is when you start taking steps there, you kind of bend the probabilities in your favor of the universe giving you what you want. I've written about this in the newsletter as well. There's one article y'all should go check out. But it's basically just talking about, like, every action that you take bends the probability of the universe in the direction of that action. You're kind of like making reality conform to what you want or what your actions are taking. And if you are intentionally focused on building savings and moving yourself toward a state of more financial sovereignty, financial independence, you will make some progress there. Doesn't mean there's not going to be setbacks. Doesn't mean that it's going to be just as easy for you as it is for your neighbor. But you can make progress here, and I truly believe that anybody, anywhere in the world, anywhere in the country, in the U.S., can do that. It's maybe a little bit. I don't know. Maybe I'm sitting in a privileged position here, and being in the position that I am, there's certainly some people who have it much harder than I do. So I'll leave that there.
Cool. So talking about Bitcoin and how adoption has trended over the last few years, the biggest story, I would say, along with the launch of the Bitcoin ETFs, has been Bitcoin Treasuries, Michael Saylor's
Mhm.
strategy, and of course the many companies that are now holding Bitcoin on their balance sheets. So when you think about Bitcoin as kind of a staple towards securing your financial independence by holding an asset that in a self-sovereign way that is growing and compounding annually at a really high growth rate. How do you think about the Bitcoin treasuries as a way to even outperform Bitcoin, or or do you view it more as maybe a diversification of investment when you're maybe already 70, 80, 90, 100% all in on Bitcoin?
Yeah. I had a tweet the other day that was basically saying the treasury companies are great for people who already own enough Bitcoin. And I said that in jest, of course, but I think it is true for most people. And maybe this is what you and your audience want to hear, maybe not. I think that the number one priority for people should be to hold as much Bitcoin as they can and to hold that sovereignly in self custody. I think that that is um, that should be the modus operandi for businesses as well, whether they are Bitcoin treasury companies or companies with a Bitcoin treasury, is that you want to stack as much Bitcoin as you possibly can. Those two things do not necessarily mean that individual investors who are not very savvy in the different market dynamics that are going on with these treasury companies should be actually investing some large amount of capital in there. I wrote a piece last year right at the tip top of the kind of craziness that was going on in the Bitcoin treasury market called mNAV madness. And if you remember back to that time, like, the treasury companies could do no wrong. They were going to the moon. Like, there was nothing that could stop it. And I'm looking at this and I'm thinking, like, wow, Metaplanet is trading at 9x premium, like a 9 mNAV. In order to make this trade by buying Metaplanet, worth it to me as an investor relative to just holding Bitcoin. It needs to at least maintain that 9x or expand. Ultimately, this is like a basis trade, right? It's like you need that premium to hold or expand in order to take the extra risk beyond just buying and holding Bitcoin. And you need it to outperform fairly substantially to account for the extra risk that you're taking by not holding Bitcoin in self-custody that you've got sovereignly, right? Because there's all kinds of other risk factors that are associated with holding any company, let alone a Bitcoin treasury company. And I didn't mean for that to be like at the top of the market, but it turned out to be, and those premiums compressed quite drastically. And a lot of people got hurt because they didn't really understand that is the nature of the trade that they were in. They were kind of denominating their returns in fiat and not thinking about it in terms of the opportunity cost of actually holding Bitcoin. I I hope that that doesn't happen again. I definitely think that we're at a time in the market, if I'm prognosticating, where it probably makes a little bit more sense from like a premium expansion standpoint to be taking a position here if you want to go out the risk curve and do that. But you shouldn't be doing that until after you've actually stacked a solid bag of BTC that you're holding in self custody, because it's like Bitcoin is the thing that you should be holding as the base layer of your savings. And until you establish that foundation, taking on a whole bunch of risk beyond that doesn't make much sense to me. And again, I'm coming from this from like a pure FIRE perspective, right? Which is you want to keep things simple. You want to make sure that you can stick with a plan over a long period of time so that you can build wealth and compound over time. If you are starting with this like other bespoke random stuff, it's going to be hard to catch up later if it doesn't go your way right away. And so I'm not opposed to investing in Bitcoin treasury companies. I think a lot of what they're doing is really great, but I just want people to be very cautious and informed in the investments that they're making when they're buying these stocks.
Right. There's a difference between, again, a low time preference versus a high time preference mentality when you're choosing to invest in these Bitcoin treasuries companies. I think there's subcultures within Bitcoin that kind of talk past each other, where it's like we saw it with Danny Knowles talking with Michael Saylor, and he was critical of other Bitcoin treasury companies stacking sats. But I think he was also very concerned about investors who maybe were coming into this trade without, like you said, already owning a bag of Bitcoin, or were just chasing, short-term gains. Yeah, it's interesting because Bitcoin treasuries, because strategy have been such a dominant narrative in the past several years, past year especially. I think it's important to always like reframe that self-sovereign Bitcoin is extremely important. How do you feel about people who are now coming to Bitcoin through the ETFs? We've got a new cohort of first-time Bitcoiners who their first exposure to Bitcoin wasn't buying Bitcoin on an exchange. It was buying Bitcoin maybe in their IRA with the ETF, maybe just buying the spot ETF in their brokerage account. I guess, what's the responsibilities of Bitcoiners to help educate those types of people? And is there a path to self-sovereignty for people whose first interaction was buying a Bitcoin ETF like IBIT?
Yeah, I mean, you have to start somewhere. And a lot of people find it very convenient and easy to buy the ETFs in brokerage accounts that they already have set up, or retirement accounts that they already have set up. I think that's perfectly fine. A rising tide lifts all boats. We need more surface area for people to start to get exposure to Bitcoin so that they can start to learn about it. And I talk to people all the time at my work at Unchained who started out by buying the ETFs or started out by buying MSTR or whatever, and they furthered their education to such an extent that they decide, hey, either in addition to this or instead of this value that I've purchased through the ETF, I want to actually own some real Bitcoin and I want to control the keys. And so that's not going to happen for 100% of people, but some subset of those people do go down the rabbit hole a little bit further and start to understand the sovereignty benefits that you get from holding actual Bitcoin and not just shares in a fund that owns Bitcoin on your behalf. So I think it's all good. I don't think we should stop educating people and just be like satisfied with that. But there's always going to be some people who never take another step beyond that. They're only interested in the dollar number go up. I think that's totally fine for them. When they're ready, they can take those next steps of education. I think for the people who are receptive, who are doing a little bit of extra research, it is our job as Bitcoiners who understand the base layer of how all of this stuff operates to be there and be receptive and put out these educational materials that can help people get from A to B and actually own the real asset, right? Like the ETFs, the treasury companies, like all this stuff is great, but it's built on top of Bitcoin. And so we still need that actual growth of Bitcoin sitting at that base layer in order to make all of the rest of this stuff work. So if people stop understanding why the base layer, the actual asset is valuable, then it kind of defeats the purpose of the whole project. I'm not at all concerned about that. I think there's always going to be people who are wanting to own the actual asset, and we should be perfectly accepting of people who are either at various levels of their journey and understanding what it is they are getting exposure to and what it is they are buying, as well as people who look at the landscape and say, okay, I want to kind of diversify the way that I have exposure to Bitcoin. I think it's perfectly fine for some people to have a little bit of ETF over here for various reasons relative to, actual whole cold hard Bitcoin that they control the keys to. And then there's certain other, layers in between, and there's Bitcoin treasury companies and that kind of thing. It's, it's perfectly fine to be doing that, and we shouldn't be like looking down on people who are taking a different approach to that.
Yeah. Are you surprised by how Bitcoin was largely adopted in this last cycle? Obviously there's been people buying spot Bitcoin, but it has shifted more to the institutional realm. Michael Saylor's raised almost $50 billion in the last 2 years to purchase Bitcoin. Was that a surprise on how this has kind of unfolded, or is this just, part of the path to Bitcoin becoming more mainstream and becoming the asset we think it will be?
It does feel like this last bull market was driven in large part by the institutions and, as a cohort of the institutions by Saylor and strategy. I think a lot of the institutional play came from like hedge funds and actual trading vehicles as opposed to people who understood the asset and wanted to actually own it. Um, the long-term like pension funds and that. It's not that we didn't see some of that, but we didn't see it to the extent that I think we will see it, as things play out in the future. Um, I was surprised that we didn't see really any retail FOMO, any like real extra retail adoption. I think it started coming in toward the tail end, and now it's been cut off at the knees by the price a little bit. I think the treasury companies took a little wind out of the sails of Bitcoin as well, right? They were absorbing capital because they were outperforming in that short period of time. And people who were new to the game and wanting to participate, they, instead of going to like altcoins or crypto assets or whatever, they went to Bitcoin treasury companies and they went to the options markets and all of that kind of thing. And then of course there's the AI trade, which is a totally different subject, but I think that took some of the capital from the Bitcoin trade as well. So am I surprised? Yeah, a little bit. I definitely thought things would play out a little bit differently in this past cycle. But you can never really predict exactly how these things are going to play out. I'm still, fundamentally extremely bullish on Bitcoin's, longer term prospects, and how it plays out is going to be a function of all of the different dynamics that are playing out in the world of geopolitics and in, the regulatory infrastructure, as well as just the broadening of the surface areas I was talking about before, right? Like Steak and Shake adopting Bitcoin. Like I've gone there, many times and paid for burger and fries with Bitcoin. It's amazing. Cash App or Square, adopting Bitcoin and making it a default that people can pay there. I think that comes to play here in the next few days is when that is supposed to start rolling out. That's amazing. Like I can't wait to be in line, grabbing a beer at my local brewery, and paying in Bitcoin for the people behind me to see that. Right. Those are the types of touch points that really get people more exposure to something that they otherwise wouldn't have exposure from. Bitcoin's primary like use case right now, at least in the United States, is a store of value, and I think that's going to remain to be the case over the short and medium term. But people don't think about money as a store of value. They think about it and on the medium of exchange. So the more that we can have people exposed to this as a possibility, hey, this guy just paid with Bitcoin. That's kind of cool. The more people bring it into their own like view of reality of what is possible and what is available and what is out there. So all of these things compound on one another and put Bitcoin in a situation of being able to absorb even more and more adoption as things continue to play out.
If you're building or managing a Bitcoin treasury, you need institutional infrastructure to match. BitGo is the digital asset backbone trusted by thousands of institutions worldwide, offering regulated custody, OTC trading, financing, and settlement all under one roof. They're now a publicly traded company on the NYSE and hold a federally chartered national bank license from the OCC. For Bitcoin treasury companies, this is the infrastructure layer that matters. Learn more at bitgo.com. CoinKite has been building the gold standard in Bitcoin private key security for years, and they just raised the bar again. The brand new Coldcard MK5 brings a massive Gorilla Glass screen and new NFC functionality for a more seamless experience. The Coldcard Q is an absolute powerhouse for serious Bitcoiners, with a full QWERTY keyboard, air-gapped, and built for maximum security. Whatever your setup, executive, Bitcoiner, Bitcoin Treasury, there's a cold card for you. Head to store.coinkite.com and use code 6BT at checkout for 6% off.
The dip is here, and with it, you might be thinking, is it time for me to borrow against my Bitcoin? Enter Arch Lending. They're building the most transparent borrowing experience in crypto. We're talking industry-leading rates from 8.49% when you borrow against BTC, and you receive USD within minutes. Your assets stay protected with qualified custody. There's no rehypothecation, and verifiable segregated addresses are used always. As your collateral grows, you can unlock more liquidity, adjust your line anytime, and extend your term with a single click. And with 24/7 white glove support, you're never going to feel like you're on your own. Arch Lending, simple terms, public pricing, market-leading rates at every size. You can learn more at archlending.com.
Right. Yeah, I think you nailed it on the head. The fact that Bitcoin can be used as a value transfer, as a medium of exchange, may not be, yes, Square's unlocking it, but it may not be widely adopted in the near term. But the fact that you can gets people really thinking about that, and I think that is really cool. Even if Bitcoin largely is still viewed as a store of value. I was talking with Jesse Myers and Andrew Webley from Smarter Web earlier today, and their company just was brought into several indices in Europe, so that a lot of pensioners in Europe now have indirect exposure to Bitcoin. Like you said, we haven't seen a ton of adoption from pensions in the United States directly adopting Bitcoin yet, but you've got Strategy, who's included in the Qs, the NASDAQ 100 indexes, and it's inevitable that they're going to be added to the S&P 500. They already qualify from a size perspective, and it may take a year or two or another Bitcoin bull market, but they're eventually going to be included. They've got their product Stretch, which is a Sailor's sales pitch on Stretch is that it's it's Bitcoin exposure with the volatility stripped away. It's paying that monthly dividend of 11.5% right now, but in a perfect world, it doesn't have price fluctuation. Are those tools that are going to get people more turned on to Bitcoin? And how do you see the adoption of tools like Stretch chipping away at maybe other savings vehicles like money markets, savings accounts, or do you expect to see just more institutional money flowing into those products over the next several years?
Yeah, I just wrote about Stretch and a little bit of a carry trade that I've currently got on with that. So go check that out on the newsletter. Really, really interesting piece, I think. And like I think again, broadens the surface area, gives people a little different flavor of Bitcoin exposure, and is more focused on people who are looking for some stable value and some good yield. Is it going to pull money from money markets and other fixed income products or people who are seeking dividends? I think we will see that over time. I don't think that anybody's. I think the broad populace still has no idea it even exists. Right, like we exist. We live in this little bubble. The people who went to the strategy conference, like myself, like you, like we understand this stuff. We know what the value proposition is. Nobody else even knows it exists, right? Like they barely know Bitcoin exists, and they certainly can't explain it. So I think that over time, the assuming that Stretch can continue to perform the way that it has performed thus far, assuming that it continued to pay these very juicy dividends and remain solvent and over collateralized and all the things that we want to see from it, yes, more and more people will start to see it, like first of all recognize that it even exists, and then start to dig into it and start to allocate a little bit more capital to it. Where I find Stretch really interesting is actually for people who are not debating necessarily, what their Bitcoin exposure should be, but what should their stock exposure should be. And some portion of that stock exposure, I think there's a good case to be made should go to STRC if you're comparing the relative like risk adjusted, volatility adjusted returns. When we were talking about the FIRE approach earlier, it kind of assumes like an 8 to 10% nominal growth in the stock market index, which is what we have seen historically over the last 100 so years. And I continue to think that that will be the case going forward for stocks. But stocks are also very volatile, right? Like they're not as volatile as Bitcoin, but there is a lot of volatility built into that. And if you are expecting to receive a 10% total return on your stocks with all of that volatility, or you can look at Stretch and get a 10 to 12% return without the volatility. Well, aside from the potential like counterparty risk or credit risk that you would be looking at for Stretch versus the the different risk factors for the stock market, if you strip that away, you should definitely go for Stretch instead of investing in the volatile stock portfolio. And so I think people, as they learn about it, of course, that's a very rational comparison to be making. And that was one of the points that I made in this recent piece is that like, for me, if I am going to, consider having some kind of stock allocation, well, why would I do that if I already believe in the thesis for Bitcoin? And I want to have something that's a little bit more of a stable and steady growth engine there. STRC really like takes the cake relative to just the stock market index because of its lack of volatility.
Yeah. Yeah. When you think of a risk adjusted return based on volatility, nothing compares to it. And I think, uh, the typical warning, we never know how this will play out, right? But
It's still young. It's still early, man. I mean,
it is still early, but I'm like so excited to see how Stretch does grow and does mature in the marketplace.
I think it's also a very good tool for like medium term money, call it like 6 to 12 month type money, right? It's like if you think that it's going to continue to be able to pay, whatever dividend it's got all these tax benefits as well, which is something that I was kind of digging into and explaining in this piece. That's all really great. And if you're not like holding on to this and planning on holding on to it for 30 years or whatever, you don't really have to worry as much about that credit risk that might be embedded into this preferred equity. You can think of it as, hey, I've got this expense that's coming up later this year. I've got the cash for it now, but I don't have to pay for it until later this year. I need somewhere to park it. Well, you could park it at River and get 3% paid in Bitcoin. That's really cool, and that's a tool and product that I love and use. Or you can stick it in money market funds and make a little bit less than that. I don't know why you would do that instead of getting the Bitcoin from the River Yield account. Or you could buy STRC and get a tax advantaged return of capital dividend that if you do decide to hold it a little bit more than 12 months is going to give you a favorable tax rate on it, right? So that's really where I think a good sweet spot for STRC is, right? Is either this comparison versus holding stocks, or this like kind of short to medium term money that you're kind of like stocking away for a particular expense or other purpose that you might have, where you need to make sure that you're not exposed to the volatility because you know you've got this coming up, but you also don't need to you don't want to be exposed to long-term credit risk that because this thing is still young, you don't know exactly what's gonna play out with it.
Yeah, we'll be sure to clip that up and package it and put it out on all the channels. Hopefully, a non-Bitcoin influencer can pick up on it and bring some more people into Bitcoin through the back
That'd
door
be
through
great.
Stretch.
Yeah.
But I talk with I've got several friends who manage money or do financial advising in their work, and they're Bitcoiners, but they have tens of millions, hundreds of millions of dollars sitting in money markets, but they say they're hesitant to even ask to allocate their clients to this, even though they want to, but they don't want to. There's career risk. They don't want to be singled out as a crypto guy. They're cashing their
Absolutely.
paycheck, living fine. They're investing in Bitcoin themselves, buying Bitcoin in self-custody, but it's like there's still this stigma out there, right? Even though we've seen pivots by a lot of major banks coming in, BlackRock with the ETF, Fidelity has custody management. You've got Morgan Stanley who's filed for a new ETF as well. They're seeing customer demand, but there's still a stigma of being associated with Bitcoin. What do you think there's more shoes to drop for Bitcoin to become a mainstream asset that we need, that we expect it to be? Is it going to be better regulation from the political side of things? Is it going to be big banks, continuing to offer products? What's your take on that, Trey?
I don't think there's anything that is needed from a regulatory perspective or anything, beyond what we kind of already have, right? Like in my view, the regulatory framework for Bitcoin is very positive. Obviously, we have the ETFs and this other like surface area for people to get involved, and all of the Treasury companies and that kind of thing. And of course, I'm speaking with a little bit of a U.S. centric view, but that kind of broadly applies across the world at this point in time. And it's funny because what I'm going to say here is probably going to be wrong, but I'm going to say it anyway, which is that it may be the case that the next time we have a bull market and we go to all new all-time highs, and Bitcoin has now gone from like something that nobody knew about, very few people own, to something that most people um, own a little bit of, or they've got some exposure to, or they're at least not like laughing at you if you were to if they were to ask you the question, do you own Bitcoin? And you say yes. Like it used to be the case. They're like, what? You own Bitcoin? What? Why would you do that? Right? Now it's like a totally normal thing. If you look around your friends and family group, I know for me, it's very normal for people to own a little bit. Do they own a material amount of their wealth in Bitcoin? No, not yet. But it's definitely a normal thing for some people to do that in their eyes. And this last bout of volatility and all this stuff has like, it's the first exposure that a lot of the people who are kind of new to recognizing Bitcoin as something that is legitimately in the financial landscape. It's a new experience for them to see this type of drawdown. The next time that we go to new all-time highs, now all of a sudden they've got this experience of seeing it draw down and then recover and going beyond that. And it's going to sear in their mind that, hey, this thing is still not dead. It's still here. It's just part of the landscape. I just saw my buddy Trey pay for a beer at the bar down the street with the Square terminal or whatever. Like it's just a normal part of things. And so that might be enough to have people thaw to the idea of really opening up access, whether it's financial advisors for their clients, or people just having this as a normal part of stacking the value that they're stacking over time, and pulling value out of the work that they're doing. Will I be right in that? I don't know, probably not, because this market and the way that people's psyche works tends to surprise me, and I think a lot of people, in the way that it actually plays out.
Yeah, there's always surprises around the corner, some to the upside, some to the downside, but the journey, the path we get there is kind of the fun part. Y-
Oh, it's a lot of fun. Yeah, it's definitely a lot of fun. I've been through so many of these. It's like doesn't phase me, right? But it's like for a lot of people who are new. I mean, this is you know, if you bought above 100,000 over the last year in 2025 when you thought it was going to 250,000, and this is your first drawdown to 60, and you haven't done that before, like this is baptism by fire, and it's really painful for a lot of people to go through that, especially if they did decide to actually like put a meaningful amount of their net worth. But one thing that I've noticed in all of my years in you know, working with Bitcoiners, talking to people who own Bitcoin or whatever, and especially people who are new to it, is that sometimes they'll you know, they'll allocate 0.5% or 1% of their total net worth to Bitcoin when they're first getting started. But then they watch it as if it's 99% of their portfolio, which I find very funny, right? It's like the attention that it gets is not at all commensurate with the actual like financial exposure that they've got to the asset. So yeah, it's just because Bitcoin's so interesting, you know, and it's something that's new and people are still like nervous about it and still trying to learn about it. That'll fade over time.
These people building the conviction in this current market are the ones who are going to have they're going to be the biggest evangelists next bull market.
Absolutely. The people who survive and then ride it all the way back up, those are like the hardened Bitcoiners that you get. In a lot of ways, if you buy at the very bottom and that's your first exposure, like great trade, right? But then you've not actually experienced the pain that comes with the volatility that Bitcoin can bring. And you're actually, in my mind, like much more likely to jump ship when it has a 50% drawdown or something, and then be out of the market when it, you know, inevitably makes a new all-time high. Whereas if you somehow buy near the top for your first thing and then you grind through that bear market or that deep drawdown and you make it out alive and you've been stacking that whole time, by the time that it's making new highs and all that, like you're hardened, man. You've got strong skin. You know, nothing can phase you going forward. You're like set in stone and your conviction is just so much deeper. That's, you know, it's difficult to get through that, but if you do, if you manage to survive, you're in a good shape.
Absolutely. You know, in this last cycle, this happens every cycle that older coins come to market and people upgrade their lives and you know, they sell some of their Bitcoin. We don't know exactly how much if people are unloading all their Bitcoin. I can't imagine if you've been in Bitcoin for 10 years that you're completely rotating out of Bitcoin. But, you know, I totally understand. You know, it's almost taboo when you're in Bitcoin talking about spending your savings. But can you talk a little bit about building wealth versus spending your savings? And now I think, you know, Bitcoin's been around, you know, 17, 18 years now. So we're seeing people who adopted Bitcoin actually retire, and not in the way in the FIRE movement, like you said, kind of like focusing on maybe just your passions. But we have people who are legitimately winding down their vocational life and looking to upgrade their lives, their family's life, and think about legacy. Do you think that's something we see continue? And how do you think that might have affected this last bull market?
Yeah, it definitely seems apparent that a lot of the older coins kind of came to the market and were selling into the strength, whether it was 100,000 being like a nice round number for people who had held on for 12 or, you know, 13 years or something, or even some cohorts I think we saw selling from back in like the 2017, 2018 days, who, you know, had held on for that. And maybe they were buying in the like 10 to, you know, $12,000 range, or even lower than that, $6,000, $5,000, whatever, $1,200. And like going from that to 100,000 is a very nice move. And if you had put any kind of material amount of your wealth into Bitcoin at that point in time, you're probably sitting pretty, and you're probably thinking about, yeah, maybe that, you know, maybe that Porsche looks pretty nice right about now. Like, why shouldn't I enjoy that? You know, and I've got plenty of more Bitcoin behind, so might as well go ahead and enjoy my life there. Money is a tool, right? Like, I am not one of those people who says absolutely under no circumstances should you never ever sell your Bitcoin. I think that if you're thinking about the savings portfolio or the investment portfolio that you have, Bitcoin should be the last thing that you sell, right? So like if you're sitting today and you've got 50% stocks and 50% Bitcoin and you're saying, okay, I'm in a position where I've reached financial independence and I want to retire. Well, if you're going to start living off of that portfolio, the way that I think about the smart way to do this is to sell the weaker asset first, right? Sell down your stocks and hold on to the Bitcoin for as long as you possibly can before you start selling that down. There are other ways to fund your lifestyle without selling Bitcoin. You can borrow against it. You can, I guess you can move that into, something like an STRC, but that is selling Bitcoin and you're kind of giving up some upside. But like the way that I think about this is, money is a tool. You're saving in order to be able to fund your lifestyle. Um, Generating income from selling down your stack is the FIRE way. That's what the FIRE people do, right? They build a stock portfolio and then they sell it down. And generating income is actually kind of tax advantageous relative to having a large amount of income, at least, that you're paying ordinary income taxes on. So there's a lot of reasons to just say, like, let's trust the way that this modeling works for the math and build up our portfolio and then draw it down over time in order to fund our lifestyle. And most of the time, you're going to end up with far more wealth than you ever knew what to do with anyway, even if you're selling down a portion of your stack every single year, especially with the growth prospects that I think Bitcoin is going to prove to still have into the future. And then the other thing to say, just kind of wrap that up, is Bitcoin is a generational asset. It's a multi-generational asset. It's the best asset that you can own for long periods of time, and something that you should be thinking about, like how to pass down to the next generations. And so you want to make sure that if you are owning Bitcoin and you're holding your own keys, that you're doing that in a really good way, and a way that is conducive to being able to actually pass that asset down. That is a very strong part of what Unchained focuses on, and what I talk to Unchained clients about on a day-to-day basis is, how do you get yourself in a position where you can't lose your Bitcoin and where you can pass it down easily to your family members, and they don't have to go on some type of treasure hunt, or you don't have to trust them not to make a mistake while you're alive before it's time to pass that on to them. So keep that in mind. But no, I'm certainly not opposed to selling Bitcoin. And if you're 100% Bitcoin, if that's your allocation, you've got no choice but to either borrow against it, which is kind of selling it in the future, or selling it down now and paying your expenses.
Well said. What's been the most rewarding aspect about working at Unchained and helping clients, you know, find meaningful ways and smart ways to custody their Bitcoin?
Yeah, I think for people who don't understand Bitcoin and understand why you would want to own it, the sovereignty aspect of it kind of gets lost in the shuffle of the number go up technology. But a lot of what I talk about in my work on FIRE BTC is actually taking financial independence beyond just that number that you're trying to stack in terms of a savings portfolio that you can live on, and actually turning that into a sovereign stack as well. The traditional financial independence, retire early movement, they're stacking stocks, they're held in a brokerage account at some institution that, maybe it's rare that this happens, but it definitely does happen to some people, where you might lose access to that wealth. If you don't actually control it directly, you have a very serious weakness in the plan for building this generational wealth. And you should be thinking about that in terms of the Bitcoin that you own, as to how much of this needs to be actually sovereignly owned, where you and only you control it. I think as much as possible, right? And that's part of what Unchained provides, is the ability for people to own and control large amounts of Bitcoin in a way where there's fault tolerance built in, and there's succession plan in mind. And then we offer all of these, services, financial services and support services built around that to make that process easy. We work with a lot of high net worth individuals and family offices and kind of individuals with large balances. We also work with a lot of businesses, whether those are small partnerships, closely held investment businesses, all the way up to large corporates and even some public companies. And just to kind of bring it back to the Bitcoin Treasury aspect of all of this, I think Bitcoin Treasury companies should 100% be thinking very diligently, and I know a lot of them are, about the custody of the Bitcoin that they own. They should be leaning into the native way of holding Bitcoin, the way of holding large amounts of Bitcoin is with multi-sig. You can do this across multiple institutions that are each holding keys. You can do this where you bring that custody in-house and you're actually taking sovereign control over the Bitcoin. I don't think it's a good idea long-term to just trust the custodians with Bitcoin. You're leaving up too much risk for all of the different problems that we've seen in the past. I trust Fidelity to hold a lot of assets, but I don't want to trust them with the Bitcoin, because the Bitcoin is the one thing that cannot be printed. If that is lost, all of that value is lost, and there's no way to get access to it. So it's very important that you secure these treasuries in a way that is taking a very, very intentional approach to eliminating all single points of failure and bringing you as close to that collateral as you possibly can. I think we're going to continue to see some evolution in the way that treasury companies are approaching their Bitcoin custody and actually leaning into the native properties that Bitcoin has, like multi-signature, like the collaborative custody model that Unchained helps our clients to employ. And I think, early on, that creates a competitive differentiator as well. Like it or not, these different Bitcoin treasury companies are competing for capital in the capital markets, right? And if you can differentiate by showing the market that you've got a superior Bitcoin custody model for the Bitcoin that you own, and that you can actually identify everything on chain, and that you're participating perhaps in the custody of the Bitcoin, I think it puts you at a strategic advantage relative to your peers there. So is this going to happen overnight? No, probably not, right? But I think over time, at least some portion of the stacks that these Bitcoin treasury companies are holding is going to move in more Bitcoin native ways of holding that. And hopefully what we'll see from investors in these companies is actually some pressure to do that.
Awesome stuff, Trey. Where can everyone find your work online?
Yeah, absolutely. Thanks for having me, Tyler. This was awesome. You can find me on X at @TS_HODL. The newsletter is firebtc.io. And make sure you go check out Unchained, unchained.com. And then I've got a personal website, treysellers.com as well. So any of those venues, feel free to reach out, DM me on X or whatever you want to do. And happy to answer questions, be a resource for anybody who's interested in these topics.
Amazing. Definitely follow Trey's work on X. He has can't miss threads all the time. Trey, one thing I have people say before they go is stay orange.
Yes, let's go. Stay orange.
Right on, ladies and gentlemen, the Bitcoin fire wizard, Trey Sellers.